Alright, cool. So we'll do the trade breakdowns for the two trades that I've taken last week. So I've taken a USD JPY short, and then I also took a Euro USD short. So yeah, we'll go over both trades. We start off on UJ on a weekly time frame. You can see we have this monthly high, which is the January highs, or the current year highs. We took it out, and we did have a very bullish weekly closure, but because of the way we pushed up into this high, I was anticipating that we would see some sort of retracement after taking out the external. So I had a bullish weekly bias on UJ, but I was anticipating some sort of retracement back into this daily fair value gap to go long. So external taken, price will likely come back for the internal before taking out the external again. So that was my logic behind taking a trade. If you look at DXY at the time as well, let me remove all these drawings so it doesn't look all cluttered up. If you look at DXY as well, we also took out the monthly buy side, and I was anticipating a retracement back into this daily fair value gap as well on DXY. And on DXY, we already started seeing some displacement lower right on the 4-hour time frame. So I was anticipating UJ to do the same, right? We sold off here, retraced back into this fair value gap on DXY, and then once I seen this, okay, I was saying, okay, UJ is probably, if DXY sells off here, UJ is also going to go lower, and UJ took out a monthly buy side. We started forming 4-hour bearish structure. We didn't have that bearish displacement, but the thing is, on UJ, we was already forming bearish structure on a 4-hour time frame, right? So remove that drawing. That's the monthly buy side that we've taken. Ran this high, closed below these down close candles, so this becomes a bearish order block. So on the 4-hour, we have this bearish order block, right? And then we come back into it, and we also sweep this internal high. We have this internal high resting inside the 4-hour order block, right? Even here, this is also a propulsion block, so I might as well even mark this one out as well. So we have a propulsion block on the 4-hour time frame, and we have a sweep inside of the propulsion block. So all you do here is wait for a lower time frame confirmation. So on the 1 hour is a bit more cleaner, right? Market maker sell model framework. This is the reversal, displays lower, took out these internal lows, gave the retracement. So at this point, if I'm looking for shorts, right, I'm waiting for some sort of counterparty. I'm waiting for some sort of a run on stops, right? Essentially, if I see like a buy setup to bait retail, that's why I look for shorts, right? Because you want to sell when guys are buying. So for example, I probably explain that in the shittiest way, but for example, right, we sweep these lows, price comes up higher, and then we retrace, and then we make a higher high, right? So if you think logically, what is retail thinking? Oh, we swept these lows and we're now in bullish order flow again, so we're gonna come back for these highs. But what a lot of people fail to consider is this push up higher, is this rally up higher really a market structure break, or is it just a stop run to continue to go lower and take out this low, which is the daily fair value gap? If the drawn liquidity has not been met, then you see all these pushes up higher. I'm just using those as retracements to go lower, which is pretty much where my whole model is based off. Just clear bearish order flow on like the hourly time frame or something, with a clear drawn liquidity being the daily fair value gap. Clear narrative, we're taking out higher time frame buy side, so we can anticipate price to go from external to internal. So we have the direction, we have the clear narrative, which is we just need to see some sort of stop run to bait people into going long. And then once we see that, I get my confirmation that price is actually not bullish here, but we're bearish, then that's when I go short. So yeah, stop run, we have this hourly fair value gap as well inside of the propulsion block. And then we swept it in London, right? We swept this high, the Asia highs, into this hourly fair value gap and this 4-hour propulsion block, and then we displaced lower, broke structure, formed this breaker block, this bearish order block, and we also inverted this fair value gap on the 1 hour time frame. So my entry was based off of the 15-minute time frame, anticipating this to be the high of the day, stop run into higher time frame key level inside of clear bearish structure on the 1 and 4 hour time frame. We have all of these lows, these trendline lows, market maker sell model on the 15-minute time frame as well, and then the daily fair value gap was the main drawn liquidity for me. So that was my short 15-minute fair value gap. Shorted there. There's also a BPR, right? Push up higher, stop run, push back lower. So anyone that longs inside of this in this fair value gap will just get absolutely smoked. And that's actually a bearish anyone that FOMO short longs here gets smoked, and then this is my bearish confirmation that we're gonna come for all of these lows. So pretty much perfect setup for me. Everything that I needed. The only thing is that this is against the higher time frame order flow, right? Higher time frame is bullish, and I basically took a retracement play back into this low, and you can see literally as soon as price ran the lows, I pretty much bottom ticked it, immediately pushed back up higher, and yeah, would have came for my stops if I didn't take profit here, or my break even. It would have came back for my break even if I didn't take profits. So yeah, really clean trade on UJ. And now we will go on to Euro USD. So what was I seeing on Euro USD? So if we start on the daily time frame, we have this small daily fair value gap. We retrace into it. We set the Monday highs, so Monday range play. We've set the Monday highs into the daily fair value gap. Same thing as here, right? Monday highs, daily fair value gap, previous day high sweep, close back inside the range, and then Wednesday continuation, Thursday continuation, same thing here. Swept the previous day high into the fair value gap. So Wednesday was actually the high of the week at the time when I took the trade. Swept the Tuesday highs into the daily fair value gap. Large bearish candle closure, so we anticipate this Thursday candle to be continuation, just like here, right? And then why do we expect price to go lower from this daily fair value gap? Because we have equal lows, right? We have this low and this low being a drawn liquidity. So pretty much got everything there, right? We've got this we've taken out the internal highs being a daily fair value gap, and we got the external lows, which is equal lows, which is low resistant lows. So very high probability chance of these lows getting taken out in one run. And then we got the hourly market maker sell model as the narrative, right? If you look as inside of the daily fair value gap, right? We formed the high of the day at New York, right? New York reversal profile. We ranged, so also AMD framework, accumulation, manipulation inside of the daily fair value gap, and then displace lower. And then the important thing is we had this hourly closure outside of the range, right? So for example here, you see here we consolidated, set the range highs, and then took out the range lows, but we never had like a closure. We even took out this low, and then we've seen this massive candle push back up. So you don't want to be short in this hourly fair value gap, for example. See here, we had an hourly closure below all the range below the range lows, and then we formed the hourly fair value gap at the same time. So I took a lower sell entry, which was this. Hide this for now. Shorted here, and then my TP was the Monday lows. I was gonna hold a run on one account for the daily lows as well, because that would have been an extra 20 pips. So yeah, around 20 pips extra. So main TP was the Monday lows, these equal lows here, and then we'll see if price breaks below these lows and comes for the daily lows. So yeah, that was the main that was a short that I took. High of the week formed pre-FOMC, and then we had we consolidated here, and then FOMC was the distribution after we already had the high of the day form, clear manipulation. So we took out this low into this hourly fair value gap, but because we were already in the hourly market maker sell model framework, I this was irrelevant to me, right? Also in the lower half of the range, so I wasn't really expecting price to reverse from here, right? This is in the discount of this market maker sell model range, so I wasn't really considering price to reverse after taking out these lows, especially with the high time frame narrative in the context in mind, and the daily candle closure as well. Very bearish daily candle closure, pretty much no wick to the downside, only body bearish body candle. So in my opinion, it was very likely we were gonna come and take out these lows, but we didn't. So this position, I just held it. I put my stops at break even, and I just held the trade, and then I took another position as well inside of this hourly fair value gap. It retraced an Asia session into the fair value gap, and I shorted for an extra 2R. And then we swept these lows, which was not ideal, right? We took out the previous day low, and then we pushed back up higher. But the trade idea was not invalidated, right? Because we have the Asia highs and we have this hourly fair value gap. So we could have formed, this could have been a New York reversal profile where we sweep the Asia highs into the hourly fair value gap and then sell off and take out all of these lows next. So, and ended up not happening. We closed above the fair value gap and hourly order block. So this position got stopped out for a loss, and this position got stopped out at break even. So I took a -1R on this trade. So I took a loss on euro, and then I took a I think what was a 2.7R win on UJ. So 1.7R for the week. So still pretty happy about the performance. The UJ trade was a great trade, and then this trade was also great trade. It was great. High probability narrative, also in line with the high time frame order flow, equal lows. So pretty much there's nothing more I could really do about this setup, just failing. The only thing you can say in hindsight is, maybe wait for a lower time frame confirmation here because we've taken out the previous day low. But again, because of the high time frame context, this sweep and displacement is irrelevant because the high time frame order flow is bearish. We have equal lows. So if you think about this in a bullish perspective, would you ever take a long here, right? Would you ever wait for previous day low sweep and long above the Asia highs towards these high resistant highs when you have low resistant lows in line with the high time frame order flow? Price also coming from a daily fair value gap as well, in it. So yeah, nothing much I can do about this trade. But yeah, pretty happy with the setups I've taken recently. So yeah, we'll just see how this week plays out and see how the monthly candle closes as well.